Hi, and welcome to the Hobart Weekly, a series created for our clients to bring you relevant financial planning insights, timely updates, and helpful perspectives each week. I'm Corey Sundstrom, Director of Financial Planning and Senior Wealth Advisor at Hobart Wealth. Today, I wanted to share some insights on affording a second home. A second home is one of those purchases that sounds simple until you realize you're not just buying a house. You're buying another set of bills, another set of decisions, and another relationship to manage from a distance. And I don't say that to be negative. I say it because the second home can be a great decision if you look at it clearly. So how do you decide if you can afford one? Well, you want to start with the first question. Can you afford it without putting strain on the life you already enjoy? That means not just the down payment, not just the mortgage. It means property taxes, insurance, maintenance, furnishings, utilities, travel costs, and also the random surprises that homes like to serve up at the worst possible time. You know, every second home has a personality. Some are charming, some are expensive toddlers. Second, ask whether the purchase would reduce your flexibility too much. This is a big one, especially for retirees or people close to retirement. And buying a home means you have to withdraw a lot more from your portfolio or take on debt that makes you uncomfortable or delay other goals, then that matters. The second home should add freedom to your life, not quietly start stealing from it. Third, pressure test how often you'll really use it. And I mean really use it. Not the fantasy version where every long weekend turns into a Hallmark movie. How many weeks a year do you expect to be there? Would you still want it if travel gets harder, family schedules change, or your interests shift? Sometimes renting for a few years gives people more flexibility and less hassle. Ownership is great, but it's not automatically the smarter move just because you can do it. Fourth, run the numbers in the context of your overall plan. If markets are down, can you still comfortably cover the carrying costs? If a major repair comes up, is that an inconvenience or a problem? If you stop working earlier than expected, does the plan still hold together? That's the real test. So here's the practical framework. Add up the full annual cost of ownership. Compare that to your current income and savings capacity or to your retirement cash flow plan. Stress test it against a market downturn or an unexpected expense. Then ask whether the enjoyment you expect to get is worth the trade-off in liquidity and flexibility. Because the right second home can be a wonderful lifestyle asset, but the wrong one can become a very expensive guilt trip. And nobody wants to own a beautiful house if they feel financially trapped by it. Thanks for spending a few moments with us on the Hobart Weekly. We hope this was helpful, and we look forward to continuing to share insights that support your financial life. And we'll see you next week.